So I'm Sam Hodges. I'm the co-founder and head of the U.S. business for Funding Circle. Funding Circle is a leading global marketplace for small business loans. We currently operate in 5 countries: U.S., U.K., Germany, Spain, and the Netherlands. Inception to date have lent out about $1.6 billion and currently are lending out almost $120 million a month to great small businesses all across those regions. We're really excited about the potential for marketplace lending to transform the way credit is provided for both consumers and small business owners all across the world. Specifically in the small business space, we think lending is pretty badly broken in most parts of the world. Certainly in the 5 markets where we're playing, we see just a tremendous amount of opportunity ahead of us. And I think it's really incumbent on players who are now getting to scale, such as Funding Circle, to make sure that we're being very thoughtful about what the right practices are to bring this industry into maturity. And so that's really around borrower protection. It's also around being very prudent from a credit perspective. So I think marketplace lending has at least 3 major developments that are on the way that are going to be really transformative. The first of which is just seeing marketplace lenders become more of the financial infrastructure. And for us, what that means is plugging in with existing financial institutions, particularly banks, but other sorts as well, both in terms of processing loans and in terms of funding the loan assets. The second big wave that I think you'll see kind of ripple through the space is the internationalization of what's going on in marketplace lending. The US and the UK, this is now very well developed. Continental Europe, it's still in the early days. And as we look across the world, you're seeing marketplace lenders spring up in virtually every major developed and many developing countries as well. And so we're really excited to see, particularly global platforms like Funding Circle take off, bring some of their scale advantages with regard to technology and credit and risk evaluation systems, and also access to the capital markets, and then use those to actually deliver high quality credit to borrowers in need in these markets. And the third is the transformation of the capital market process behind these marketplace lenders. In the very early days, it was really individual investors, buying directly. Then came in a set of direct credit hedge funds who've been playing, and now what you're seeing are very large institutional asset managers and banks buying. And what that really speaks to is the growing maturity in the space that drives down the cost of funding to the marketplace, and that's a benefit that will spill back to borrowers. And it also means the funding sources now behind marketplace lenders are much more stable and permanent than they have been in the past. So Funding Circle is pretty unique in a couple of ways. One of which is all we do is small business lending. 100% of our focus. We have 420 staff globally. That's all they think of from the time they get up to the time they go to bed. The second is we're a pure marketplace. So unlike other platforms, we're not actually using our balance sheet to intermediate the transactions or take a spread. We think the marketplace format is a very powerful model. From a long-term kind of return on equity perspective, we don't have regulatory capital requirements because our institutional investors and individual investors are buying the credit directly. The model is much more scalable on a lot of levels. It's also great because you can actually bring in different types of investors who have different risk appetites and have that capital line up against the types of borrowers you're serving. So we think the pure marketplace model is something that's pretty unique as well. And the third big difference is in terms of the type of credit product we have. We have a very fairly priced term loan. Interest rates start from 5.5%. So on the better end of our credit spectrum, we can be directly comparable to where a bank would make a loan to a small business owner. And what that means is a small business owner not only gets the advantages in terms of speed and convenience of working with a digital lender, but they also get a product that's a very good match from a cost perspective to their long-term financing needs. So I think it's really those attributes, as well as the very global nature of our platform, which in itself I think is somewhat unique, that really sets Funding Circle apart. So online lending presents a really strong benefit to consumers, and it's really around speed, convenience, and transparency. Transparency of rate, the way the product is structured, the fact in our case there's no prepayment penalty. Those are all real powerful benefits that make this a really attractive thing and where borrowers actually really understand what they're going to get. Second, speed. Unlike traditional lending process, which can take upwards of 1 to 2 months, typically we can make a credit decision in a matter of days and fund inside of a week. And so for a small business owner where opportunity cost really matters, a small business owner wants to run their business, the speed that we're able to deliver really means that they can get back to it and get the capital they need quickly. And then convenience, that's about being able to work with us as a digital process, digital lender, where they can actually upload documents and actually do their credit application outside of normal business hours. You don't have to go into a branch between 9 and 5. Matter of fact, a very large share of the application activity we see falls outside of normal business hours. Because again, if you're a small business owner, you want to run your business. You don't want to spend a bunch of time waiting in a branch lobby. Working with credit bureaus is a really important aspect of what we do. And that's both in terms of information acquisition, so we can adequately price credit, and also so we can target our customer acquisition in a thoughtful way, but also in terms of contributing performance data back to credit bureaus. Now, when many credit grantors think about this, they're really thinking about it in terms of the hammer, right? But there's actually also the credit improvement aspect of being able to report to bureaus as well. And particularly in the case of small business borrowers, many of whom are very early in developing the credit for their business, our ability to show that these loans are performing, these small business owners are in fact making payment, sending those data back to Experian over time will allow the small business owner to get even more credit and at lower cost as they grow their business.